All right, we are live. I'm flipping the tables with Nathan Latka, typically the guy interviewing other people. Nathan, thanks for joining me on this podcast, man.
Dude, Andrew, this is fun, man. Small world. I'm stoked to be here.
Yeah. So hey, I'm well, first I want to hear about Founderpath. Tell me about Founderpath, how you started it and what is it? And yeah, let's go. Let's start there and see where it goes.
Well, Founderpath was happened by accident, right? We sort of fell into it. The following story sort of happened like this, right? So I had a company called Heyo, which I bootstrapped and grew to call it like 80,000 bucks a month in revenue, 90-ish. And then made the mistake of raising VC and getting pretty diluted when I was really young. So I didn't understand liquidation preferences, ratchet clauses, things you see in term sheets today. And ended up flash selling that business in 2015 for like 300K. I was doing 600K in ARR when because it was declining, and I flash sold it just to get out of the situation and move on. I said, I'm never going to make these mistakes again. Let me just interview founders for a living until I figure out what to jump into next. And so I was interviewing founders. I remember you coming on. I'm going, this guy is bootstrapped to how much in revenue? This is crazy.
I remember
And
when we did that interview, I didn't know who you were. So
why'd you
because
agree? Why'd you agree to come on?
Uh it was maybe 4 years ago, so I can't remember, but I usually say yes to most podcasts because I enjoy doing them. I enjoy conversating with people. But I remember you specifically asking me like questions that I was like, because I did it on my sales floor, so I'm surrounded by like 30
Your
people.
people.
Yeah, so I'm like disclosing like revenue numbers that we were transparent, but like it caught me so off guard. I was like, whoa, this is I was expecting like layup questions and you were just hammering me.
Well, listen, John Lee Dumas is a podcast for that. You can go talk about your biggest failures. For me, I'm just going to hit hard and try and get to the data. But you know why I do that. It's not, there's a lot of these big VC backed companies that have raised 30, 40 million bucks. And some of these CEOs, they come on the show and they go, we're killing everyone else. We're growing the fastest. We're beating, but like, I know about the bootstrap guys and gals in their space who are crushing it and they're happy and they're free and they have cash flow and they have no boards to worry about. And like, I always would challenge as VC backed founders. So it was a privilege for me, and it is a privilege. I still have the podcast today. It's called The Top Entrepreneurs. I just love featuring bootstrap founders that figure out creative ways to build a business.
I have a personal question for you. This is a little off topic. We'll get to Founder Path next because
Sure.
just microacquire Founder Path, we're partnering. We got to get into that. How the fuck do you do so many podcasts in one day? Like you show your schedule and you have like 50 fucking, do people like miss and then like do you go to the bathroom? Are you in like a spacesuit and you just pee? Like how do you do it, man? Like and then I want to know at the end of the day, what do you do? Because I would just go to In and Out and like get a bunch of ice cream and pass out. Like
That part is pretty spot on, except it's Whataburger down here in Austin, Texas. I
yeah.
just get a double patty. Just leave me alone. I'm watching TV for an hour. The badging stuff, though, I think it would be really difficult to do if you just didn't enjoy it. I get a lot of energy from talking to founders, and what happens is like I'll book them, interviews from like maybe 9 a.m. to like 6 p.m. But as you say, the show up rate's not 100%. One or two will miss, and like that's when I'll like run to the bathroom or make a quick smoothie with like protein or like grab another super coffee and chug it. So that's how it works.
Nice. Do you have like a favorite one that you've done? Like one that just got you like, besides mine, obviously.
Well, yeah, yours really was great. It depends on how you
Your
define great.
yours that one like you actually pulled out because we stopped sharing revenue numbers and you kind of like pulled them out and like because we were doing we'd share them with like Inc. magazine, but our competitors like started catching on. Like Build
Well,
Fire
and
was.
that was, I was gonna say, that's what you talked about live. You're like, yeah, this guy named Ian at BuildFire, he was an affiliate and then he built a competing product. Then I'm like, okay, I'm
Yeah.
gonna have Ian on. I want to know how big Ian is. And I had Ian on afterwards. I'm like, oh my gosh, he really did just like copy. You can respect him or not, but he
I
ripped you off and then grew the business,
I've actually, yeah. So for people who aren't aware, Ian started as a reseller of business apps, and he ended up building a multi-million dollar business, to my knowledge.
4 or 5 million. Yeah.
I caught up with him recently just to kind of say congrats, and Since I'm like out of the business, just kind of high-fived him. It was kind of cool. But
I think, by the way, this is a very important strategy. Like you and I, like when I heard it, I'm like, well, that guy's a jackass. And you're probably like, well, this really sucks. This guy started reselling. But you know what? It is a good way to get into SaaS and de-risk. Like test your ability to sell someone else's product. And if you can sell a lot of it, then spend 50, 100 grand of your own money, like building an MVP yourself to take it to market, and then add your own twists later on. Again, it sucks to have that happen to you, but it is a good way to de-risk.
yeah, in another sense, I mean, they built a good product. I don't want to get too off topic here, but they pushed us to be better too, because they had some things we didn't have, like an API. They had like other services.
Yeah.
So shout out to Buildfire. They're doing a great job. But okay, Founderpath. Give me the quick, what does it do?
Yeah, so doing these interviews, right? 2015, I started. What happened was in between the 20-minute interviews, we only record for 15 minutes. Founders would start asking me, Nathan, can you help us raise capital? You talked to a lot of founders. What are you seeing in the market? And it wasn't just equity. A lot of founders were asking us to help them raise debt capital. So like in 2018, 2019, my desk was just piled with term sheets helping founders raise debt. Like, I mean, I was reaching over here actually before the interview. You can see, you're going to know a lot of these names. They're older now, but like, whether it was Tamaya, Lighter Capital, Scaleworks, like, Espresso Capital, like just tons of these traditional debt firms. Clearbank eventually too was sponsoring the podcast. And what you realize on a lot of these debt facilities is there's a lot of backfilled terms. They actually get pretty darn expensive. There's warrants, there's covenants, there's prepayment fees. It's an RBF. So if you grow faster, you pay it back quicker. I did a big SaaStr talk on this, but long story short, as we built Founderpath, number one was to help founders raise money from other debt providers. So it was like a sort of a live data room. But then we raised our own money and started doing debt essentially ourselves. And we started doing term loans and then listened to the market and realized, wow, a shorter product that was on a shorter payback would be better.
So you were essentially, that's awesome. So you were basically, if I'm understanding this correctly, you were a reseller for other debt provider. You were just kind of like a middleman, and then you're like, hey, why don't we build a company around this? Kind of like Buildfire.
That's right.
You were like, is that kind of accurate to say a little bit?
Well, no, because none of these guys actually built, like they didn't have software. Like if I send you to Espresso, you're going to talk with 10 of their underwriters. It's going to take you 4 months and you're going to close the deal. But like I would always save all of these term sheets, and you can see like I would highlight sections of like terms that I hated for founders that I figured out basically with my dev team how to like code out of the closing process and build into Founderpath to sort of automate.
So your goal is to help founders stay bootstrapped, save equity in their company, and grow at their own pace. That's
exactly right. It's honestly, it's happiness. Like when I interviewed founders, bootstrapping company, where almost always the bootstrapper was happier than the VC backed company, because that CEO is under so much more pressure. Their lifestyle sucks. They get 4 hours of sleep. They're probably divorced. Like they want kids but don't have time. I mean, not always, but like generally speaking, you realize it's way easier to bootstrap a company to 5 million in revenue and take 2 million in profits than it is to go chase $1 billion outcome, right? Where you have like a 0.0001% chance of success and the whole process sucks getting there. You get my point.
Yeah, I would agree. Obviously MicroAcquire, we raised like over 6 million recently. So I can confirm there's definitely, more pressure. So I don't recommend venture capital. Unless
Andrew, you had a cushion, like you did the smart thing. You built
that's what
a
I was
cushion.
gonna say. Like the three things that I always recommend, like the sequence of building businesses. One, build a service business. Like just start with a blog, start with the agencies, start with something simple like a cash flow business, reinvest that into a SaaS company or an asset that you can sell, and sell that, and then swing for the fucking fences. Because statistically, your odds of, if your goal is to just make a few $1,000,000, venture capital makes no sense. And honestly, you could probably argue if you're trying to make any money at all, venture capital also statistically does not make sense. So I agree with you on that. But yeah,
when you should write a post. Have you written a post on that sequence?
A tweet.
Oh, dude, I think that would kill it if you just like went into more detail on like your first agency and how it morphed into business apps and now how you're swinging for the fences. I love that pattern's perfect.
Yeah, I think I mentioned it on the podcast with you, but I had like a job board before business apps, and I sold that, and that was like the seed money for business apps,
Mm.
and so that's how I got started. And then for this one, I'm just having so much fun. Like I get to work with people like you and just other entrepreneurs. But enough about me. So acquisition financing. Tell me about, some of the deals that, you're looking to finance on Microquire specifically, like an example or, just whatever you think would be relevant, because you'll probably get a lot of questions specifically like what are the terms? What are deals that you want to fund? What are deals that you don't want to fund? How does it work? I just asked you 5 questions, so just pick your favorite one and let's go with that.
No, I mean, I'm scanning here while I'm talking to you a bunch of the open offers right now, right? So, like, let's say I'm looking at one of these. There's a company that's doing $200,000 in trailing 12 months revenue. The asking price is, $500,000. And you guys are sitting there going, man, I'd love to do this deal, but I need to come up with 200 cash at closing, right? And then the other 300 maybe you're going to pay over time. Maybe that's the deal you agree to. So it's a $200,000 sort of AR company. You're paying sort of 2.5x for, so call it 500K. You need 200 grand right now, but you only have 100K. That's sort of where Founderpath would be perfect, right? What we can do is match up to half of whatever the buyer is bringing to the table at closing in cash, right? So in that deal, instead of you guys, right, buying, instead of you bringing 200 grand cash at close, you bring 100. We would put up 100 as Founderpath, and you'd pay us back $5,000 per month for 24 months, which is a total of 120,000. So we would make $20,000 on that over a 2-year period, but enable you to save 100K of equity right at the start.
Nice. So what is the largest deal that you would fund, and then what's the smallest?
Well, I mean, we have a lot of capital to deploy. So there's not necessarily on how large, but I can tell you what I enjoy the most really are, deal sizes that are under $1 million, right? You guys are looking through the open offers on right now, and there's companies that are like want to sell for 100 grand up to 5, 6, 7, 800 grand. Those are like perfect fits for us. And the way we think about funding these is we want to obviously meet you, get a sense of, hey, have you bought SaaS companies before? What's your plan for them? Do you agree? Microquire has a great section obviously about recommended growth tactics, right? Like what would these founders do if they kept the business? So like, are you in a position to actually execute that strategy that they're recommending? And then once that's done, you can go to the link, the partnership link, which I think Andrew, you'll probably attach to this interview, and we can get the financing done in under 24 hours. So we'll go as small as 10 grand and as big as $1 million out.
Nice. And so is this for individuals? And if it is for individuals, I assume it's for corporations, LLCs, etc. That makes complete sense. But let's say I'm an individual. Is there any sort of personal guarantees that you attach or anything like that that people should know about?
Yeah, there's no personal guarantees. There's no warrants. Again, I have all these term sheets from traditional providers.
What's a warrant?
Yeah, a warrant is basically some of these older debt firms. If you go raise $1 million in debt, they'll say, "Hey, Andrew, we'll give you $1 million
It sounds
in
like
debt."
something illegal. It sounds like a warrant. I always a warrant
like
for your arrest or something like that.
Like
so
a police.
It doesn't sound good. Oh.
Yeah, you're giving up its equity. You're giving up 1% in warrants of your company if you take that debt. We don't do that.
So a typical loan would be, let's say I use like one of the other debt providers that take warrants. They would have a interest rate, terms on loan plus equity.
Yeah, they're going to have an interest rate. They're going to have an origination fee. So you're going to pay, I'm reading all right. You're going to have 1 to 2% origination fee. You're going to have an advance fee. You're going to have to cover their legal costs at closing. So 10 to 15K there. You're going to have a financial covenant that we have to keep cash in the bank. There's all kinds of backfill terms. We don't do any of those.
Gotcha. And so Founderpath is building some badass shit. I love your guys' platform. Tell me about like the SaaS analytics that you provide, because they're off the hook. You have like different cohorts. So not only do you provide acquisition financing, just to be clear, so you're looking to fund deals on Microquire, loaning as little as 10K up to $1 million, possibly more depending on the situation. Correct? Close that book.
exactly. Any buyer buying on Microcredit right now, and you have to bring X amount of cash at close, basically we'll take half of that for you. That's a good way to think
Nice.
about it.
And then tell me about the SaaS analytics that you bring to the table.
Well, I have to give a shout out here to, like, Patrick Campbell, right? And Josh at Barometrics, right? Even the SaaS Optics crew. I tried to convince Patrick in a library in Boston 2 or 3 years ago to get into the funding game. And frankly, he just makes so much freaking money doing
I
pricing.
I gotta say this. I love how you and Patrick are friends, even with similar products. Like I love that about the startup community. Like it to me, it just shows just how big of a market there is for multiple different companies in a certain sector.
Well, he's
Um,
killing it, dude. I mean, he's got Netflix paying him $500,000 to do like chargeback consulting. I mean, it's crazy.
what
That organization is crazy.
I
He's
remember,
killing
I
it.
I used when they were priced intelligently back
Yeah.
in the day for business apps. Because I made it my pricing just like every other founder. Like one day, hey, it's like 39 a month. I don't know.
Yeah. Yeah. We're so I just caveat being many years ago, I tried to convince Patrick to do this sort of funding and financing because he has a lot of data there. So does SaaS Optics. So did Josh at Barometrics. Josh tried introductions and then Flash sold to obviously Xenon, which is a different story now. But what we had to basically build was table stakes, was essentially a replica, and it doesn't even match. It's not product parity yet, but basically a replica of Barometrics and Profitable, so that we could then layer on another level, which was the actual get money from Founderpath. But what we're doing now is we're adding on things like we'll tell you what other people are paying engineers. We'll recommend engineers you can hire for $30 an hour that are really good full stack, back end, or front end, based on what other bootstrap SaaS founders are paying people all around the world, whether it's Krakow,
Ah.
Argentina, Salt Lake City. So it's like a private glass store. We're thinking about anything bootstrappers need to scale and building their operating system for them so they can make more money, keep more equity, and generally
Mm.
be more happy.
I like that vision a lot. I mean,
Yeah.
I've looked at the analytics, and my personal favorite is the cohort by like customer size, where you can see
Yeah.
like I don't know, you know what I'm talking about, like the graphs and the bands that show you like your most valuable customers. I'm not as smart
You're,
as you with this sort of stuff, but
no, I love this because it
but
doesn't matter, right? Like you're killing it and you don't need to know like the specifics of how a chart works. You just know it's working.
yeah. So what else should we talk about in terms of founder path? So founder
Well, but
path.
my team, by the way, like we've only talked about me. I mean, my team is incredible. We when we first started building this, we had to think about like how to launch new ideas for bootstrappers quick. And I was looking really hard for the right partner on this. And I said, well, why not go recruit the product hunt maker of the year from 2016? And so now Mubs, is essentially my co-founder on Founderpath.
Such a good guy. I
Amazing.
I love Mubs. Shout out to Mubs.
He's
Um,
incredible. You know how much work I had to do to recruit him? Someone meets me and they go, oh, like spammy, smarmy media guy, and then they realize, oh, actually
yeah.
underneath there's some strategy here. We like what he's building.
So tell me a little bit about traction. You can be vague on this. I'm not going to Nathan Latka style you with this, but how much capital have you deployed so far? And then how much capital do you plan to deploy over the next, like, let's say 12, 24 months?
Yeah, what I'll do is I'll give you a run rate, right? So over the past 2 weeks, we deployed almost $2.5 million, right,
Damn.
across over 10 founders. So we're on track. Like assuming that run rate continues, which we think it will, we'll deploy between 50 and $100 million over the next sort of 12 months.
How much do you think you're going to deploy with Microquare? You should take that and multiply it by 2.
Well, how many listings do you have right now that are under $1 million sale price that are SaaS? It's
Uh,
hundreds, right?
It's hundreds. There's 1,000 plus listings. We moved in other categories like e-commerce, marketplaces,
Uh,
news, newsletters. The majority is still SaaS, probably 80% SaaS. So if we're just thinking, I mean, I would say at least over 500, 600 deal sizes have been increasing. But there's probably 200 million plus of fundable total total combined revenue of all the startups in Microquire as of today of this recording is over 400 million.
Yeah, and when someone buys like a $250,000 company, like the deal price is 250 grand on microacquire, are there chat features behind the scenes where they can do like a portion that's cash up front, then a portion earn out and that sort of stuff? Or no, it's always all cash up front?
Depends on the buyer. Some buyers
Okay.
are all cash. We see a lot of seller financing.
Mhm.
Um, I actually recommend to founders to educate themselves on seller financing. And for those who don't know what seller financing is that basically is a loan that you issue to the buyer. So for example, you're selling for 500,000, the buyer only has half, and then you make an agreement, a legal agreement with a legal contract saying over the next 12 months, they're going to split that additional 250,000 and pay you monthly or quarterly, whatever you agree upon. But by doing that, you increase your buyer pool by a lot more because more people have 250K than 500K. I don't have data behind that, but
That's really smart. I know it's super smart. I mean, I'm trying to answer your question about how much could we support microacquire buyers with over the next year. So like some backwards math, right? If there's 500 SaaS companies right now listed at an average deal price of 250K, right? That's $125 million in deals. And let's say that we end up supporting 50% of that across all those buyers. That's 70 million bucks from Founderpath to microacquire buyers over the next year. I think that's very doable. That'd be great. I would love that.
I'm into it.
Yeah, I love that. Isn't everyone going to be a founder by the way? Like, I think 5 years from now, dude, everyone's going to be a founder, right? And so everyone's going to be looking for assets like this to buy.
Yeah, the bet that we're really making, I mean, I guess maybe my view on just software in general is I think the small business economy is going to shift towards online, profitable, and digital. I've talked about this a few times, but instead, like the person who maybe would start uh plumbing company, they're going to start like a niche SaaS company or something. Like we're going to see so many more indie creators with the rise of no code tools. It's just easier than ever to start a SaaS company. And the types of companies I see on microacquire blow my mind. Like literally, like people are making like SaaS companies that like will drop cartoons, literally like automated cartoon creation. There's a SaaS company that removed background images on like PNG files running on autopilot, making like 500,000 a year. Like there's just so much opportunity in software. So I think, there's a lot of focus and a lot of talk, especially in like the media and just, just in general around startups being venture backed, unicorns, blah, blah, blah. We raise a bunch of money. But I think the bigger market, honestly, and this could be incorrect because it's harder to determine the TAM of a market where, when you raise a round of funding, you have to file a Form D and that information becomes public and you add it all up. You get these insights, through your podcast. But I think the market of founders who are building these smaller software companies, bootstrap, fully owned with debt, is potentially bigger than the venture market over the period of time. I think we're going to see like some huge winners that just you kind of see this graph where it's like we got these ones, but if you maybe like move out like the top like decile, like the bootstrap market is going to be a lot larger. That's a total guess, but I don't know. What do you think about that?
I'm looking at our Excel file right now, which we built from the 3,000 interviews I've done, plus we've enriched it with just other relationships I have with founders. We tried to map the whole SaaS ecosystem. When I filter by bootstrapped and I filter by more than 1 million in ARR, there's 7,124 companies in the world, right? Like that. And they're combined, all those founders combined revenue is about $377 billion. It's a massive, it's not exponentially bigger. It's like double exponentially bigger, more bootstrap SaaS companies than venture backed. Remember, only like 0.01% of companies get venture backed. It's just we hear about them because that's what the press loves to write about, and which drives me nuts. But that's how it works.
Yeah. And those are only the ones you've talked to. So you could probably take that number and multiply by like 50.
Well, no, we've enriched that. So again, there were 7,100 companies in that list. I've only interviewed about 3,000 SaaS founders total.
Gotcha.
Yeah.
Gotcha.
Yeah. And the way we got that number, by the way, the total ARR, is we took head count and assumed a revenue per employee at a bootstrap company of about $120,000. That's how we were able to actually approximate the total ARR. But you should see this list. I mean, it's probably a lot like what you see on Microacquire. The creativity is insane. I mean, and the team always loves the founder because these founders get so creative and they do dividend sharing pools and equity splits, and everyone's living a happy, healthy life. And they're like Guillaume on French Riviera is taking their team out at Lemlist, having a blast, or Nathan Barrett at ConvertKit, right? Like thinking about like commerce and also like doing like tiny house stuff. Like it's about bootstrapping is a lifestyle, and there's nothing wrong with that. It's not negative to have a lifestyle bootstrap SaaS company.
Yeah, I totally agree with that. And I've lived that lifestyle. It was a good one, and it paid off well.
I've lived that lifestyle, but
Yeah.
you still all in bonds, or you gotten more creative now?
Oh, are you talking about the podcast I recently did?
Yeah. I was watching. I'm like, oh wow, he had a lot of discipline to just overnight say, put this in bonds. I don't want to touch it.
Well, so the backstory behind that was when I sold business apps, I used the wealth manager that Christian Friedland uses, who's a good friend of mine. And he basically was like, hey, I'll do this for free. Like, you don't have to use me as your wealth manager, but you should move that money out of your bank account. So we just moved it out of the bank account, put in bonds until we figured out like what is our long-term investment strategy. So yeah, I have like index funds, but it's still super boring. And anyone who's into stocks is like, this kid's an idiot. Like, but yeah, I own
You've reinvested some, right? In Microacquire, I imagine.
Yeah, I pretty much only I try to keep my investing very simple. I don't check the stock market. I don't own any cryptocurrency anymore. And I just basically
Anymore. When did you exit? When did you sell?
probably when I sold altcoin, that was kind of my, hey,
Okay.
I'm good, did okay with that. That was a company I started after business apps. If anyone's like into crypto, background on that is we were trying to build basically when you send Ethereum, it's like super slow. It takes like 35 minutes.
Right. Yeah, totally. Yeah, latency issues.
Yeah, we were working with like a side chain framework called Plasma, and we were working with like Vitalik Buterin and like Fabian Vogelsteller was on our advisory board. We had some pretty high up people in the Ethereum Foundation helping us, but I think blockchain has a huge future ahead. But I think when you build in blockchain, it feels like the internet in like 2000. So we ended up just selling the assets to a company that better suited it. We ended up running into more regulatory issues because to launch what we were launching, like this was 2018 when like the SEC came down and like fined all these companies doing ICOs. And we were like, yeah. And I actually talked to the SEC too. I called him proactively and was like, hey, like, is what we're building, like, what is it going to require? And they went over like money transmitter license, like chief compliance officer. And so that's when we were like, all right, let's just, kind of like what you did with Heyo, where it was just kind of like a single. But
Get out of it. Yeah.
yeah, that market in 2-3 years, I think we're going to see a lot of really cool applications. But getting back on track here, tell me about like the dream deal you'd like to fund Microacquire, just as like another, final example, just to kind of really drive this home.
Yeah, I mean, the one I'm looking at right now, right? It's a total sale price of $250,000. The company's doing $100,000 in ARR.
Let's do 2 or 3.
Yeah. You want me to keep going with that one, or you want me to pick a different one?
Pick a different one. Up to you. Up to you.
Okay, cool. Let me go back. Okay, cool. So here's a SaaS one. Okay, SaaS $6,000 in ARR with 13,800 on trailing 12-month revenue. The asking price is $125,000. So what we would do is if that whole asking price is upfront cash, we would take half of that. So if you listening right now are a buyer and you put up, what is that? $62,500. We would put up $62,500. You pay that back. The key thing we do here that's different than others, we'll let you pay it back over a longer period than just a year. So you have time, like you have more time to reinvest your own money to drive ARR growth. There's a lot of you guys that might take Founderpath money and then sell the company before you've paid us all back again. So you're passing basically that off to even somebody else to juice your returns if you want. That would be a great deal.
Nice.
Let's see. I'm going to do another one here.
There's one more.
Cool.
I I
Okay.
I love this, by the way, because you know there's so much demand in terms of financing for the smaller deals because no one will finance them, so this is going to be, I'm excited for this, Nathan.
Yeah, no, I am too. Something's funky with this one. You tell me what's likely going on here. Profitable SaaS, it's 1.1 million in recurring revenue, but the asking price is 500K. Am I reading that right? The asking price is half of
Uh,
what annual recurring revenue is. Well, listen, I'll go down this path, right? I'll give an example. This would be, from what I can tell, if I'm understanding, this would be a steal for somebody.
yeah,
Maybe I'm not reading.
link that to me right now. I'll look at it.
Okay, cool. Yeah. It's this one. Chat. Boom. That one. Let me pick a different one while Andrew looks at that one. Yeah, I think, and by the way, too, like there's a lot of you listening right now that are thinking about selling right on MicroAcquire. If you're selling on MicroAcquire and you want to put up an asking price of 300 grand, one of the things you can do is, again, go through the partner link that Andrew will post and see how much we would give a buyer of your tool. So if you have 100 grand in ARR and you want a $300,000 sale price, we can pre-approve you for 150, or your buyer, whoever is going to end up being, for 150 grand. Andrew, I don't know if we figure out a way to build that in the interface, but we can also help the seller that way too,
Yeah, I agree. So coming back to the one that you were talking about,
Yeah, what am I missing there?
yeah, so this is like a direct to consumer company. So they're doing 1.2 in TTM revenue, 55,000 profit. So it
Yeah.
looks like they're trying to sell for 10x TTM profit, which I think
I
is
guess
doable.
what's interesting though, I totally doable. So what's interesting about how we look at this is we do not look at profit when we're deciding how much that we can get you. We're looking at top line revenue. SaaS companies, if you're investing in things, you rarely will be profitable if you found a growth channel you want to use. So that's also a bit of an advantage here. But we just want to make it simple. I mean, ultimately, what makes me happy is, like, Andrew, if we blink, right, and a year from now, there's like a collection of 36, 100 found buyers that used to be doing something they hated, had some savings, used their savings plus Founderpath money to buy a $250,000 company on MicroAcquire, and now they're loving their life, growing their company, living the bootstrap life, and just enjoying time with their family and growing, right? And this is their project. That would be a huge success for us.
Yeah, I mean it's almost like a new type of entrepreneurship where instead of thinking of an idea, eating glass for 2 years, you can come on MicroAcquire, buy something, and then have a finance by Founderpath. So we could probably wrap it up here.
Sounds good, man.
Dude, excited to partner with you, Nathan. Always been a huge fan of everything you've done. And obviously appreciate all your support for MicroAcquire. But final question, just a little bit about you, man. Who's like your favorite entrepreneur? Give me your favorite entrepreneur and like favorite book.
So my favorite entrepreneur would probably be something
Can't
like
say
Ted
can't.
Turner. Can't say
Ooh,
who. Can't say who.
Elon Musk. I get a lot of Elon Musk, and I'm like, come on,
No,
that's
no.
a
Look. That's what everyone is talking about right now. I get that, and I like the guy too. But like when I talk about like who I've studied and learned from and copied things they've done and felt like it's worked in my life, Ted Turner or Michael Bloomberg. The way they use media businesses to launch other businesses, soft power to hard power, is fascinating. So there are books on both of them that you can read. Those would be my favorite entrepreneurs.
nice. And then if people want to learn more about you, where should they go?
Nathan at founderpath.com. You can email me directly, or you can find me on Twitter, just at Nathan Latka.
All right, Nathan, thanks so much for coming on this podcast, and really excited to close some acquisitions with you, dude.
All right, man, let's do it. Thanks, Andrew.
All right, cheers.